appearance on Dion's Daily Dose does not imply endorsement from or by any candidate or guest. The views, thoughts, and opinions expressed by Dion Bergeron or Dion's Daily Dose are his own and do not represent the views, thoughts, and opinions of any guest. Material and information presented is for general information purposes only. The Dion's Daily Dose name in all forms and abbreviations are the property of its owners, and its use does not imply endorsement of or opposition to any specific organization, product, or service. If you'd like to support the show, please visit our Patreon at patreon.com/Dion's Daily Dose.
Good evening, ladies and gentlemen. So we have a little bit of a situation that was called to my attention with the LaPorte Community School Corporation. Now, my kids went to LaPorte for years when we lived there. And as a matter of fact, the issues that plagued it, that the State Board of Accounts calls into question, actually affected the schools while my kids went there. So what is going on? Well, the State Board of Accounts had done an audit on LaPorte schools bookkeeping, and they released a letter, and then they released a supplemental. I'm going to show you guys directly what I'm talking about here. Here we go. So it is obviously State Board of Accounts, 302 West Washington Street, Indy. Supplemental compliance report of LaPorte Community School Corporation, LaPorte County, July 1st, 2020 to June 30th, 2022. This was actually filed 3/29/2023. Now, I haven't seen anyone report on this, but maybe they did. I just don't know. But we're going to go through the whole thing, but I want to show you a couple of excerpts real quick so that you can see what's going on. The school corporation had not been able to reconcile its bank accounts to its funds ledger since the conversion to a new accounting software in April 2016. The school corporation's 3 bank accounts were not reconciled timely, nor was there a combined reconcilement of all bank accounts performed. In other words, their books were off. Their numbers were way off. The school corporation engaged a consultant in 2022 to perform reconciliations. The consultant prepared reconciliations for the months of July 2020, June 2021, June 2022, and monthly thereafter. Additional audit procedures were performed to test the June 30th, 2020, 2021, and 2022 reconcilements provided. In reviewing the documentation provided, we noted the following items. 1, there were various items noted in the reconciliations that could not be identified, explained, or supported. Additional audit procedures were performed, and at June 30th, 2020 and 2021, the adjusted bank balance was determined to be less than the ledger balance by $140,563 and $284,799 respectively. That means one account was $140,000 off. The other account was $284,000 off. You might as well say $285,000. At June 30th, 2022, the adjusted bank balance was determined to be greater than the ledger balance by $121,088. The financial statement was not adjusted for these variances. Oh, by the way, it gets a lot worse, just so you know. 2, the June 30th, 2022 outstanding check listing included checks issued prior to June 30th, 2021, totaling $16,708. However, the June 30th, 2021 outstanding check listing did not properly include these checks. Yeah. Next one. Financial close and reporting. The school corporation did not have effective internal controls to detect and prevent errors when completing, submitting, or reviewing the annual financial report entered into the Indiana Gateway for Government Units financial reporting system, which was the source of the financial statement. The lack of effective internal controls allowed the following material misstatements to remain undetected. 1. The fiscal year 2020 to 2021 clearing fund activity was omitted from the financial statement, which understated receipts and disbursements, $17,996,833 and disbursements by $17,818,422 respectively. Continuing on, here's where it gets wild. Okay, take a deep breath. The 2021-2022 clearing fund activity was included in the financial statement. However, the receipts and disbursements were determined to be overstated by $39,482,934 for receipts and disbursements $38,221,830. We're talking tens of millions of dollars that have no receipts, no idea what's going on. Number 3, the prepaid school lunch fund was omitted from the financial statement, which understated receipts, disbursements, and ending cash and investments balance by $323,534 receipts, $331,582, that's for disbursements, and ending cash $189,781, respectively. Finally, oh boy, school corporation did not have the, actually, I think we already saw this. This is the same, isn't it? Yeah. So, yeah. Let me let me share with you the entirety of this. We're gonna go through it. It's only 16 pages, and a good portion of those aren't actually anything. They're big blank pages. Let's see. Liz says, if I mismanage budgets like this, I'd be fired at minimum. And I wholeheartedly agree. I want to call your attention to the people that were in charge of this fiasco at the time. Treasurer Jane L. Grillo, term 7/1/20 to 6/30/23. Assistant Superintendent of Business and Operations, M. Gregory Hunt, 7/1/20 to 6/30/2023. Superintendent of Schools, Mark D. Francesconi, 7/1/20 to 6/30/23. Now, these aren't right because I think he just stepped down. President of the school board, Marie Gilliland, then Mark Cosior, Sherry Ott, and Jim Arnold. These are names to remember, and I personally would ask for a little bit of accountability. But here we go. To the officials of the LaPorte Community School Corporation, LaPorte County, Indiana, this report is supplemental to our audit report of the LaPorte Community School Corporation for the period from July 1st, 2020 to June 30th, 2022. It has been provided as a separate report so that the reader may easily identify any audit results and comments that pertain to the school corporation. It should be read in conjunction with our financial statement audit report of the school corporation, which provides our opinions on the school corporation's financial statement. This report may be found at www.in.gov/SBOA, which I have it up and I've been looking for it, but I haven't been able to find the actual original report just yet. When I do, I will make sure to hook you up. As authorized under Indiana Code 511-1, we perform procedures to determine compliance with applicable Indiana laws and uniform compliance guidelines established by the Indiana State Board of Accounts. The audit results and comments contained herein describe the identified reportable instances of non-compliance found as a result of these procedures. Our tests were not designed to identify all instances of non-compliance. Therefore, non-compliance may exist that is unidentified. Any official response to the audit results and comments incorporated within this report was not verified for accuracy. Here we go. We saw some of it, but a similar comment also appeared in prior report B48423 entitled Finding 2016-001, prior report B52745 entitled blah, 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 Financial Transactions and Reporting, Condition and Context. There were several deficiencies in the internal control system of the school corporation related to financial transactions and reporting. In addition, the school corporation had no process to monitor, identify, or communicate corrective actions to improve internal controls. In layman's terms, that means you guys did a very bad job. You had no oversight. You didn't have any controls in order to fix this. Effective internal controls over financial reporting required the school corporation to monitor and assess the quality of the system of internal controls. Cash and investments, bank reconciliations. The school corporation had not been able to reconcile its bank accounts to its funds ledger since the conversion to a new accounting software in April 2016. Now, this came out in 2023, and they're talking about 2020, 2021, 2022. So what they're saying is that the school corporation, ever since they switched to a new accounting software in April of 2016, their bank accounts haven't been right. The school corporation's 3 bank accounts were not reconciled timely, nor was there a combined reconciliation of all bank accounts performed. The school corporation engaged a consultant in 2022 to perform reconciliations. So I'm sure we use taxpayer funds to hire someone to fix this. The consultant prepared reconciliations for the months of July 20th, blah, 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 blah. This is, we covered this previously. In reviewing the documentation provided, we noted the following items. And again, $140,000, $284,000, $121,000. Yeah, we've got several $100,000 that's here, there, incorrect. Number 2, $16,708. However, they didn't properly list those. Financial close and reporting. The school corporation did not have effective internal controls to detect and prevent errors when completing, submitting, or reviewing the annual financial report entered into the Indiana Gateway for Government Units financial reporting system, which was the source of the financial statement. In other words, there's a required reporting system. They didn't have the controls in place to do it properly. They reported it. It was wrong. And most importantly, we've got 17.9 million and then 17.8 million incorrect. Number 2, 2020, 39.4 million, $38.2 million wrong. It's not correct. Overstated, understated. The books are an absolute mess. Multiple $100,000 wrong. Audit adjustments were proposed, accepted by the school corporation, and made to the financial statement. Criteria. Indiana SBOA is required under the Indiana Code, blah, 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 to define the acceptable minimum level of internal control standards. To provide clarifying guidance, the state examiner compiled the standards contained in the manual, Uniform Internal Control Standards for Indiana Political Subdivisions. All political subdivisions subject to audit by SBOA are expected to adhere to these standards. The standards include adequate control activities. According to this manual, quote, Control activities are the actions and tools established through policies and procedures that help to detect, prevent, or reduce the identified risks that interfere with the achievement of objectives. It's a lot of stuff to say, do this because it works and it'll keep you from getting in trouble. Detection activities are designed to identify unfavorable events. It's a really nice word. In a timely manner, whereas prevention activities are designed to deter the occurrence of an unfavorable event. Examples of these activities include reconciliations, authorizations, approval processes, performance reviews, and verification processes. An integral part of the control activity component is segregation of duties. There is an expectation of segregation of duties. If compensating controls are necessary, documentation should exist to identify both the areas where segregation of duties are not feasible or practical and the compensating controls implemented to mitigate the risk. Evaluations are used to determine whether each of the 5 components of internal control is present and functioning. These evaluations may be conducted on an ongoing or periodic basis. The criteria used are developed by the oversight body, elected officials, management, governing boards, or recognized standard-setting bodies or regulators. A baseline of the current state of the internal control system is compared against the original design of the internal control system. The baseline consists of issues and deficiencies identified in the internal control system. The results of the monitoring process are evaluated and documented. Management remediates identified issues. Now, Indiana Code 5-13-6-1E states, quote, all local investment officers shall reconcile at least monthly the balance of public funds as disclosed by the records of the local officers with the balance statements provided by the respective depositories. In other words, the bank's going to send statements. It's your job at least once a month, all local investment officers, which is everybody in the school corporation, it's your job to reconcile them. It's your job to look at these bank statements, and it's your job to make sure they're matched, right? Make sure it's correct. You got a couple of comments here. Let's see here. Let's get it back down to where it was. Okay. And, you know, this brings up a great point. Just think what all that missing money could have gone to. Clubs, support staff, support services, staff salaries. Did teachers have to go without raises because this money was missing? Or did they just fly by the seat of their pants and just hand it out? And she mentions, like I did, that our boys went to LaPorte schools at that time. Think of how much more they could have experienced, or the education could have been better if they knew where this money was and did it properly. We will never know. Indiana Code 5-11-1 is 4. Yeah, 51114A states, well, I missed. At all times, the manual and or computerized records, subsidiary ledgers, control ledger, and reconciled bank balance must agree. If the reconciled bank balance is less than the subsidiary or control ledgers, the amount needed to balance, listen to this, you ready? The amount needed to balance may be the personal obligation of the responsible official or employee. I want to take just a moment and let you digest that, because that is extremely important. We're talking tens of millions of dollars. Once again, I'm going to highlight this. If the reconciled bank balance, in other words, the real amount, is less than the subsidiary or control ledgers, than what you reported, the amount needed to balance may be the personal obligation of the responsible official or employee, which means all these tens of millions of dollars, unless they can say, here they are, it may be the personal obligation of the people in charge, which means they may have to magically make tens of millions of dollars appear. This is why it is critically important to have independent, unbiased media that will tell you what is going on. Oh, yep. Let's see here. In Munster, there was a huge budget issue with the two superintendents being overpaid like $1.5 million. So they had to each pay back half of it. Yes, exactly. Accounting and Uniform Compliance Guidelines Manual for Indiana Public School Corporations, Chapter 1. Chapter 1. Indiana Code 511.14a states, the state examiner shall require from every audited entity financial reports covering the full period of each fiscal year. These reports shall be prepared, verified, and filed with the state examiner not less than 60 days after the close of each fiscal year. The reports must be in the form and content prescribed by the state examiner and filed electronically in the manner prescribed under this. You got to do it right. You have to do it the way they want you to. Financial, supplementary information, and other information are required to be entered annually into the annual financial report via the Indiana Gateway for Government Units Gateway Financial Reporting System. The information entered into the Gateway contained the following errors. This is a summary. Cash fund information. The financial information entered into the Gateway contained the following errors. Number one, 2020 to 2021 clearing fund activity was omitted. In other words, they didn't even put it in there. It wasn't even listed. This resulted in the understatement of receipts and disbursements by $17,996,833 and $17,818,422, respectively. Number two, 2021 to 2022 clearing fund activity was reported. However, the receipts and disbursements were determined to be overstated by $39,482,934 and $38,221,830, respectively. Number three, the prepaid school lunch fund was omitted. This resulted in the understatement of receipts, disbursements, and ending cash and investments balance by $323,534, $331,582, and $189,781, respectively. Adjustments were proposed, accepted by the school corporation, and made to combining schedules of receipts, disbursements, other financing sources, uses, and cash and investment balances presented as required supplementary information. Leases and debt information. The school corporation omitted the outstanding debt balances for the general obligation bonds, Series 2020 and 2021, which resulted in the understatement of the ending principal balance and principal and interest due within 1 year by $5,725,000 and $1,162,475, respectively. So, understatement of the ending principal balance and principal and interest due within 1 year. So, $5,725,000 they did not report, and $1.1 million they had to pay out that they didn't report. Adjustments proposed, accepted, and made. Grant schedule. The grant schedule entered into Gateway contained the following errors. One, the child nutrition cluster was incorrectly reported, which resulted in the misstatement of expenditures by $758,390 in total. Two, several additional grants were incorrectly reported, which resulted in the misstatement of expenditures by $255,764 in total. Other errors included incorrect program names and identifying numbers. Adjustments were proposed, accepted, and made. Criteria. Indiana Code 511.1-4A states, quote, the state examiner shall require from every audited entity financial reports covering the full period of each fiscal year, prepared, verified, and filed. State examiner not less than 60 days, Same thing as before. Average daily membership. The same comment also appeared in prior report B58124. Condition and context. The school corporation has a virtual element in the form of a virtual program and virtual instruction due to the pandemic. However, the school corporation does not have a student engagement policy. The school corporation was unable to provide enrollment documentation for 66 of the 85 students that were selected for testing in the test of average daily membership. Now, that's a very odd thing to not have. 66 of 85 students they did not have enrollment documentation for. That's odd. The school corporation was not following its own attendance policy, number 5200, number 5200, and student records policy, number 8330, that were adopted. We noted the following instances of noncompliance. School corporation was unable to provide documentation for proof of residency for 33 of the 85 students tested. 2, the school corporation was unable to provide documentation to verify the student met the age requirement, birth certificate, for 7 of the 85 students tested. Number 3, the school corporation was unable to provide documentation that one virtual student was even attending school at all. This is, I don't know about you guys, but this is extremely concerning to me. This is what our tax dollars go for. Now, remember, this is why they want more money all the time. All the time. We need more money for our public schools. Our public schools are desperate for money. We need more money. Maybe once you guys can do your job tracking what we already give you, we'll have that conversation. Criteria. The Indiana Department of Education has released guidance for reporting ADM information and requires supporting documentation of enrollment and attendance information by grade and school to be signed by the building principal or head of school and made available in the event of an audit. I think it's interesting that the State Board of Accounts got the wrong spelling for principal. There is no further guidance as to what the terms enrolled and attending mean outside of IC 20-43-1. Therefore, we are of the audit position that each school should adopt a student engagement policy, which would mirror the requirements set forth for virtual charter schools in IC 20-247-13H, School Bulletin and Uniform Compliance Guidelines, Volume 228. Officials shall maintain records, enrollment cards, rosters, reporting forms, etc., which substantiate the number of students claimed for ADM. Again, ADM being average daily membership. How many students do you have? What are they doing? Because it's critical. The government knows this because most of the money they get is based on the number of students they have. Moving on. The building level official, principal, assistant principal, etc. This is the proper principal, by the way, is responsible for reporting ADM to the school corporation central office, must provide a written certification of ADM to properly document responsibility. The certification must, at a minimum, include a statement detailing the names and location of the records used. These records must be retrained for public inspection and audit to substantiate ADM claims, accounting and uniform compliance measures, etc. They're got to go back for a second. Yes, there's another word, principal and principal, but two different meanings. This is the correct one in this format before, someone like me goes, but you can say it. Each unit is responsible for complying with the ordinances, resolutions, and policies it adopts, accounting and blah, blah, blah. Compensation and benefits. The same comment also appeared in prior report. Condition and context following discrepancies were noted relating to payroll disbursements. 1, some contracted employees signed contracts at the beginning of the school year, but did not receive the pay rates per the signed contracts until later in the school year. As a result, the contracted employees received retro pay from the beginning of the school year to when the contracted rates were implemented. For example, an employee had a signed contract as of July 1st, 2021, which was effective beginning August 20th, 2021. but did not receive the contracted pay amount until April 5th, 2022. Guys, let's see, September, October, November, December, January, February, March, April, 8 months apparently went without pay, or at minimum didn't get paid what they should have. One administrator tested did not have timesheets or attendance records as required. 2 employees tested were paid an additional $125 stipend from the High Ability Grant on March 18th, 2021. Documentation was not provided that indicated that the school board approved the stipend. 2 employees tested were paid $25 an hour for 30 hours, totaling $750 from the ESSERI grant for attending a math recovery workshop in August of 2021. Documentation was not provided that indicated that the school board approved the hourly wage. Criteria: Indiana Code 20-26-5-4A states in part, quote, in carrying out the school purposes of a school corporation, the governing body acting on the school corporation's behalf has the following specific powers. ... 8. To do the following. A. Employ, contract for, and discharge superintendent, supervisors, principals, teachers, librarians, athletic coaches, whether or not they are otherwise employed by the school corporation and whether or not they are licensed under ... business managers, superintendents of building and grounds, janitors, engineers, architects, physicians, dentists, nurses, accountants, teacher aides performing non-instructional duties, educational and other professional consultants, data processing and computer service for school purposes, including the making of schedules, the keeping and analyzing of grades and other student data, the keeping and preparing of warrants, payroll, and similar data where approved by the State Board of Accounts as provided below, and other personnel or services as the governing body considers necessary for school purposes. Oh my. B. Fix and pay the salaries and compensation of persons and services described in this subdivision that are consistent with IC 20-28-9-1.5. Classify persons or services described in this subdivision and to adopt a compensation plan with a salary range that is consistent with IC 20. Determine the number of persons or the amount of the services employed or contracted for as provided in this subdivision. Determine the nature and extent of the duties of the persons described in this subdivision. 19. To ratify and approve any action taken by a member of the governing body, an officer of the governing body, or an employee of the school corporation after the action is taken, if the action could have been approved in advance and in connection with the action to pay the expense or compensation permitted under this, or any other law. In other words, these people are in charge of hiring, firing, and making sure they do their jobs. All documents and entries to the records must be made in a timely manner to ensure that accurate financial information is available to allow the unit to make informed management decisions and to help ensure compliance with IC 51511. Accounting and Uniform Compliance Guidelines Manual for Indiana Public School Corporations, Chapter 1. All compensation and benefits paid to officials and employees must be included in the labor contract, salary ordinance, resolution, or salary schedule adopted by the governing body unless otherwise authorized by law. Compensation must be paid in a manner that will facilitate compliance with state and federal reporting requirements. Same thing they listed earlier. 511-94B states in part, quote, the State Board of Accounts shall require that records be maintained showing which hours were worked each day by officers and employees. Remember the missing timesheets? The Federal Fair Labor Standards Act, FLSA, requires that records of wages paid, daily and weekly hours of work, time of day, and day of week on which employees' work week begins be kept for all employees. These requirements can be met by use of the following prescribed general forms. And they give some general forms. Here, use these. We make it easy for you. General Form 99C is required only for employees who are not exempt from FLSA, are not on a fixed work schedule, and are not paid weekly. Additional information regarding FLSA rules and regulations may be obtained from the Department of Labor. Penalties and interest, Internal Revenue Service. The lack of internal controls over the bank reconciliations allowed the school corporation to not timely detect that a federal tax payment from October 2020 was not processed properly nor paid after a power outage. In June 2021, the school corporation contacted the Internal Revenue Service with an unrelated question and was informed of an underpayment of taxes owed for the December 31st, 2020 tax period. The school corporation was told fees would be waived if taxes were paid. On June 23rd, 2021, the $375,152 tax deposit was paid. $375,000. The school corporation then received a notice from the IRS dated July 5th, 2021, detailing the tax deposit owed from the December 31st, 2020 tax period and the assessment of penalties and interest totaling $128,608. The school corporation attempted to get the penalties and interest abated without success. So I wonder, just out of curiosity, I wonder what kind of evidence they have that the IRS actually told them fees would be waived. Anyway, then the school corporation received a notice from the IRS dated August 17th, 2021, for the assessment of penalties and interest for the first 3 taxing periods of 2020. The school corporation paid $505 in penalties and interest on August 26, 2021. Furthermore, from July to October 2021, the school corporation continued to receive notices of the outstanding penalties and interest due for the taxing period December 2020, with the continued accumulation of penalties and interest. To stop the accumulation of penalties and interest, the school corporation paid the outstanding balance of $126,758 in penalties and interest on February 1st, 2022. More of your tax money going exactly where it should, back to the federal government. Dude, the school corporation has filed for penalty relief with the IRS. After the school corporation was notified of the missing tax deposit in June of 2021, the school corporation instituted internal controls to ensure that tax payments are properly completed and promptly processed through the bank. Oh crap, this is going to cost us more money. Gee, maybe, just maybe, we should make sure this doesn't happen again. School corporation checks the bank activity online to ensure that the payment transaction was processed. Currently, both the treasurer and the assistant superintendent of business and operations review the bank activity to verify that the transaction was completed. It's another criteria talking about how they're required to do all this. Officials and employees, duty to pay claims or remit taxes in a timely fashion. Failure indicator, if you don't do it, it's an indicator of serious financial problems, which should be investigated by the unit. Additionally, officials and employees have a responsibility to perform duties in a manner which would not result in any unreasonable fees being assessed against the unit. Any penalties, interest, or other charges paid by the unit, you ready for this? Ready? May be the personal obligation of the responsible official or employee. Yes, indeed. Whoever is responsible for not paying taxes on time could actually be made to pay that nice fat $128,000 penalty and interest, $128,608. That's your money, ladies and gentlemen. That's my money. We pay that in taxes. So, in my opinion, absolutely. You screwed up, pay it. Pay it. Indiana State Board of Accounts is required under Indiana Code 511-127E to define the acceptable minimum level of internal control standards. To provide clarifying guidance, state examiner compiled the standards contained in the manual, blah, 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 blah. All political subdivisions subject to audit expected to adhere The standards include adequate control activities according to this manual, blah, 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 blah. Make sure you do your job. Make sure you know when stuff's coming, right? Pretty much. Expectation of segregation of duties, etc. Subsequent event, bank reconciliations, condition and context. The school corporation had not been able to reconcile its bank accounts to its funds ledger since the conversion to a new accounting software in April of 2016. The school corporation's 3 bank accounts were not reconciled timely, nor was there a combined reconcilement performed. School corporation engaged a consultant in 2022 to perform reconciliations. Oh crap, we messed this up. We better hire somebody with taxpayer dollars. The consultant prepared reconciliations for the months of July 2020, June 2021, June 2022, and monthly thereafter. In reviewing the documentation provided for the July to December 2022 reconciliations, we noted the following items. 1, there were various items noted in the reconciliations that could not be identified, explained, or supported. Additional audit procedures were performed, and at December 31st, 2022, the adjusted bank balance was determined to be greater than the ledger balance by $133,877. That means $133,877 magically appeared in the account, and they cannot explain it. 2, consultant prepared monthly reconciliations from June 2022 through December 2022, noted variances ranging from the adjusted bank balance being less than the general ledger by $2,891,392. So the bank balance was less than the ledger being what we figured it should be, $2.8 million, to the adjusted bank balance being greater than the general ledger by $3,618,649. Here's the part that truly disturbs me. The variances were not further investigated. There are several $1 million that are in places that shouldn't be, either more money than should be there, less money than should be there, multiple instances of incorrect accounting procedures, but it's okay. It's taxpayer money. Who gives a damn? The December 31st, 2022 outstanding check listing included checks totaling $54,867 that had already cleared the bank in a prior month. In other words, the outstanding check listings were not updated. SBOA is required to define the acceptable minimum level, blah, 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 blah. Control activities, this is what it says. Same thing. Integral part is segregation of duties, expectation of segregation of duties. All local investment officers shall reconcile at least monthly the balance of public funds, etc. At all times, manual or computerized records must agree. If it's less, again, if it's less, the amount needed to balance may be the personal obligation of the responsible official or employee. I wonder why they chose to not continue to investigate. I wonder. You think that might be it? Where's it at? The variances were not further investigated. Maybe because they'd be responsible for it. I don't know. What do you think? The same comment also appeared in prior. The prepaid school lunch fund was not reconciled monthly to the total of the individual student meal accounts. As of June 30th, 2022, the reported balance in the prepaid school lunch fund exceeded the total of the individual meal accounts by $135,379, which means there was more money in there than there should be. When a student puts money into their individual meal account, it should not be considered income to the child nutrition program until that student goes through the lunch line and charges a meal to their account. Therefore, while money is in the student's individual account, the balance should not be included in Fund 800 school lunch. A school should set up a clearing account with the fund number of 8,400 prepaid school lunch accounts, which is included in Chapter 4, State Board of Accounts, Uniform Compliance Guidelines. When a student brings in a deposit, the receipt should be recorded to Fund 8,400 using receipt blah, blah, blah. After this, blah, 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 blah. This is how you're actually supposed to do it. They did not. Contents of this report were discussed on March 14, 2023, with M. Gregory Hunt, Assistant Superintendent of Business and Operations, Mark D. Francesconi, Superintendent of Schools, Jim Arnold, President of the School Board, Brian Seberg, Vice President of the School Board, and Natasha Henry, Deputy Treasurer. That is it. I'm sorry, 14, not 16 pages. That's the entirety of the report, ladies and gentlemen. And I don't know about you, but I am very concerned about this. This tells me that frankly, way too much money that we get taxed that goes to our education system is being mismanaged. At minimum, in LaPorte Community Schools, but I suspect that the problem is a little more widespread than that. We have had issue after issue with our local schools, and this is just another. Now, I personally would like to see a little accountability. Have you guys been made aware of this? Was this posted in your local news? Were you told about this? Did Harold Argus or what are they now? They're something else now. Our local reporters that are supposed to be on top of things like this, did they let you know? Let me know in the comments. I think I know the answer, but maybe we missed it. Maybe we missed it. Talking a lot makes me thirsty, especially having to read a whole bunch. I'd like to see some I'd like to see some head roll, to be honest, but that's just me. I want to see accountability. I want people at minimum to tell us, hey, here's what happened. We fixed it. We know how to fix it. Something rather than just crickets in the clink of silverware. I mean, nothing. We're going to be on top of this story. I'm going to dig into it a little more. I'm going to see what I can find out, and I will keep you informed. Hope you have a wonderful evening. I'm going to be going live here again in a little bit to share some other news with you, but I wanted this to be just this. Thank you for attending.
If you'd like to support the show, please visit our Patreon at patreon.com/Dion's Daily Dose. This has been Dion's Daily Dose, hosted by Dion Bergeron. Executive producers, Sean Holgram and Michael Beebe. Copyright 2024. Dion's Daily Dose, all rights reserved.